Alright boys, how's everyone doing today? It is 6/12/2017 at 10:26 a.m. Markets opened an hour ago, so we're an hour into the market today. Made some positive trades, also made some negative trades. Got out of, what was it? DXTR, I believe it was, with like a, I don't know, 10 or 12% gain, and then I was anticipating another stock called MAC, M-A-C-K, to make a bounce, but it's still stuck in between the 150 to 140 area. A break of 140 would be bearish, while a break of 150 would indicate a breakout and head a lot higher. Also on the day, let's just pull it up right here. Looking at BlackBerry and also looking at Sprint. More interested in Sprint at this point. Let's just go take a look. Indicators, they look okay. You see the RSI starting to curl here. It's kind of stuck in no man's land at the moment at 43. It is next to 50, which is 50 is kind of like a key place to break. It's kind of like these numbers right here, your 70 and your 30. When you get a break from 40 to 60 and you cross 50, that's considered very bullish, and usually, you'll see a price movement as we see right here. RSI breaks 50 and you can see the run up from $8.21 to $9. So, MACD, we got this just one little red stick right here. It is possible to turn that green very fast and just have, a very small depression like we do here. You can see this slow stochastic is also reaching 20, as well as the CCI is headed down to the negative 115 area. This is the yearly chart. Let's just go into a daily chart really quick. We're anticipating the bounce off $8. You can see it hit $7.99 before, coming back up above 8, which is a pretty good signal. Right now it looks like we're going to have a rise followed by a little dip. We reached up to 8.13 here, and at the moment we are sitting at 8.08. So the anticipated play here would be a bounce off of the $8 level, which we can see yesterday it's got all the way to 8.03 but didn't quite break. So today is really going to tell us where the stock is going to move for the next, day, or for the rest of the week. So, alright, so that's enough of that. We'll get into today's video. Just wanted to give you guys a quick little up to date on some current stock pricing and stuff like that. Alright, so today's video is going to be on candlesticks. We'll be talking about patterns, different types of candlesticks, bearish and bullish candlesticks, and how to read them and what they mean. So the basics, alright, so the green candlestick represents a bullish candlestick, while the red one obviously represents a bearish. So like I was trying to explain in the video before on basics, you got two parts of the candlestick. You got the body, which is the solid part, or the you can call them shadows, whiskers. People call them a bunch of different things, but pretty much, you have the body, and then you have these little lines on here, the whiskers or the shadows. So for example, let's take this green candlestick here. As we can see right here, it says open. So let's just put this at $1. So that and each candlestick represents a period of time. They can be made up of 1 minute, 2 minute, 5 minute, 10 minute. You can go to week, day, month, year, 12 hours. There's a whole bunch of different, time frames you can put on these things, but pretty much it represents a amount of time and the price action that happened in that amount of time. So like I said, you get an open at, let's just call this $1 right here. Let's say you have a morning sell-off, people panic in the morning, they take their profits from the day before, and the stock dips down to 90 cents. We'll just call this 90 cents. And then people decide that the morning sell is over, and the weak hands selling off from yesterday kind of disappear, and either the day traders or the actual traders will come in and start buying off the dip at 90. So, they'll buy it off the dip at 90, and then they'll start to drive price higher and higher. And then, I don't know, for example, the stock could get overhyped or something, or, people could buy it past what they actually believe it's worth in manipulation or in some type of run-up. So, get the 90 cents, you come back here, break through $1, and then you start heading upwards. So let's just say that this is a 1-day candlestick. So this is 9:30. It hits here at 10 o'clock, and then let's just say by 2 o'clock, you've gone from 90 cents to, let's call this $1.50 up here. So you go up to $1.50 at 2 o'clock, and then let's just say from 2 o'clock to 4 o'clock. For those not aware, 9:30 is market open and 4 o'clock is market close. So let's say at 2 o'clock you reach 150, and then you get people taking profit, or you get people seeing the manipulation, or whatever it could be, or anything like that. And from 2 to 4 you see a small sell-off from 150 to, let's just say, 130. So stock reaches all the way up to 150 here, and then at 4 o'clock when market closed, it closes at 130. So the body is composed of the open and close, and the whiskers just composed of all price action that has happened. So it just means, the price came down here, but it was able to come back up here and close up here. The price came up here, but it came all the way back down here. So body, whiskers, and then same thing for a bear or a bearish candlestick right here, the red one. Instead of having an open down here and go up here, you're gonna have an open at the top right here. So the stock will open here. Typically when you open here and you go up here, this upward is gonna happen before this downward. I mean, it is possible for you to come down, explode up again, and then come all the way back down. But I'd say for the most part, a candlestick like this is going to go up first and then down. But like I said, you got the body right here. So the open of the stock, the close of the stock, and then the whiskers representing the high for the time period and the low for the time period. And, there's different shapes and all that stuff that come up that we'll look at in a minute, that will help you, determine what the candlestick fully means and all of that. Like I said, there's bullish and bearish candlesticks. Obviously, a bullish one indicates a increase in price, while a bearish candlestick represents a decrease in price. So the green ones obviously are always going to be good. It means the buyers are in control and the buyers are buying it up, as compared to a bearish candlestick where the sellers are in control and the sellers are selling off the stock. We'll have to talk about something called shorting stocks. It plays heavily into stock trading, and it can be a very dangerous thing. Basically, it's just, instead of buying the stock, you're selling it. So instead of buying it and hoping it goes up, you are selling it and hoping it goes down. It's a difficult concept that we'll have to talk about later. But when you have short sellers on a stock, they can drive the price down huge, and they can create massive panic, and they can start to scare investors away from a stock. And if they have a large position and they start selling, everyone else is going to sell and cause a massive panic. So those are what we call bears in the market. But yeah, so you got bullish stocks, bearish stocks. Bullish buyers are in control, bearish sellers are in control. Bullish price is going up, bearish price is going down. So like I said, we have a bunch of different types of candlesticks. You'll see candlesticks with really wide bodies and short whiskers, or really long whiskers with short bodies. You could see the body on the top of the, more towards the top of the formation, or you could see it at the bottom. You could see, no whisker on top and a huge whisker on bottom, vice versa. Or you could, just see stocks with no whiskers at all. This would mean, stock opened here, closed here. It didn't go higher than here. It didn't get lower than here. So that's why you don't have any whiskers on this. Same here. Stock opened here, didn't go any higher at all. Went shorter, or went down and didn't go any lower than this. These candlesticks right here are, either really bullish or really bearish. This means, a really, the stock hit its, it hit the max in that time frame and it stayed there. It didn't hit the max and come down a little bit. It hit the max and stayed up there. Same with this. It didn't make any low. It finished exactly at the low for this time frame. So these are two candlesticks that are important to watch out for. They're just very strong indicators of what's going on. Here, down at the bottom, we have what we call spinning tops. It's kind of a small body with, decently sized whiskers. These candlesticks usually indicate some type of momentum change. We'll take a look at some examples, but usually when you see this, it's not really bullish, it's not really bearish. People are trying to make up their mind of where the stock is going. It's kind of just in the middle. That's why it represents a momentum change. It's in the middle, and investors are trying to figure out whether they want to take it up or down. Obviously, you have bullish and bearish ones. This one represents a bullish one. The black represents red, by the way. And this would be a bearish one. Just because one's bullish or bearish doesn't mean they can't go either way. Obviously, your bullish one's more likely to go up than down, but there's still a possibility it could go down. Same thing with your bearish one, and also it just depends on, what type of chart pattern's playing out. If you have a, well, like I said, we'll go over some examples in a minute. And then, here we're going to see some hammers, an inverted hammer. The hammer is typically a very bullish candlestick, and you'll often see it at like some type of a dip. You'll have a stock coming down, and then, if you see a hammer, that's typically a pretty bullish candlestick that indicates, the short or the downtrend might be over, and the buys might be coming in. So it's a really good candlestick to look for, as well as the inverted hammer. Let's say you have a incline, you're starting an uptrend, and then you have a big fat inverted hammer at the top of your chart. That's a very good indication that there's going to be a change, and the price could come down. So these are very important candlesticks to look for. And then you got these long shadows and lower shadows. Obviously, anything with the body on top of halfway is obviously going to be bullish, unless it's a red candlestick, but typically that's not going to happen. You had the stock fall all the way down here, but it made a strong comeback, and came all the way up here, hitting a high of here and closing here. So, huge sell-off followed by a massive buyback. And then, same here, stock opens here, goes all the way up here, and then falls down here. Obviously a bearish one. But yeah, you guys can, I hope we're all starting to grasp the theory of these things. Obviously, green candlesticks are good. Not every green one is going to be good. But, we can use these certain setups to, help us predict what's going to happen with the stock. And then the last and probably most important or most known or most looked at candlestick is the Doji candlestick. Like the spinning top, the Doji candlestick is a ginormous momentum changing candlestick, typically indicating a momentum change of some type. You can see you have different types of dojis. This is your standard doji. Dojis are not going to be red or green. They're going to just be black or white or whatever software you're looking at makes them, indicating a neutral price action. So for example, let's just call, the line 150. So stock opens at 150, falls down to 140, then gets bought back up to 160, and then closes at 150. So your open and close were at 150, but you saw your low and your high at 140 and 160. So this is just your standard doji that represents a price change. Then you got your long-legged doji. Pretty much the same thing as a doji, except it's a little bit more extreme because you have bigger highs and bigger lows. With just a lot more price action inside of the candlestick itself. So these two, they're obviously, your long-legged doji is going to indicate a more extreme price movement coming up than your regular doji, just because of, how much it actually moved in that time period. There's also dragonfly dojis as well as gravestone dojis. I'd say that this is where you can really tell what type of momentum you're going to get out of it. Obviously your gravestone doji, you can tell just by the name and just by the looks of it, that it's probably not going to be a good thing. It's an indication, stock opens here, we think we're going higher, but we come back down and close here, So pretty much after that type of a movement, after you've came all the way up here, but then you come all the way back down and close here, it's a pretty good indication that you went up, opened here, came up here, couldn't break here, finished back down here. What can I compare it to? I don't know. I can't really think of anything to compare it to, but pretty much you're coming up and then you just see it come right back down, and the coming down momentum is just going to continue to carry you down. But the dragonfly doji is a bullish one, as we can see. You got the price opening here, coming down. Buyers come back in, start to buy it up, and then you close back at the same place. So just for example, just watch the cursor. Hit here, come down, and then you find your buyers, you find your support here, and you get to come back up, and you can just assume what the rest of the momentum does. You come down and then back up. So these are different types of candlestick. There's a lot more. This is just a basic chart I found that I liked because there's a lot of these different combinations and types, and you could look at these all day, and there's a whole bunch of different types. But I mean, these are pretty much the basic ones, and just the ones that you really need to know. Now there are patterns that go along with these candlesticks, obviously. Again, here's just this is just a chart I found online really fast. And you see all these different candlesticks next to each other and such, that can also like the candlesticks themselves. There's they form patterns that can also help you decide where the price is going to go. So we got bearish engulfing here. You can see a green candlestick, where we came from, down here to up here, followed by this big fat red one, which, opens up at the previous close and then falls dramatically below the previous close. It's kind of start indicating a downtrend, kind of. Here we have two inverted hammers next to each other. We can see, we got the green one followed by the red one. This is where I was saying, these still can be, bullish patterns. The bullish things can still happen off of, setups like this. For example, here you have the two hammers. I told you previously these were bullish hammers, but we can see, we have two bullish candlesticks in a row, but we can see that the price here, this is called the bullish tweezers. Out. Some of the names for these are pretty fucking stupid, but typically if you see something like this, you're gonna have a price action that you have two bearish candlesticks next to each other. So this is a pretty good indication that especially when you have a red one followed by a green one. So yeah, so that's the bullish tweezers. I mean, these ones really don't happen a lot. You're more likely to see your bullish engulfings, your bearish, or your bearish engulfings, your bullish engulfings. Your dojis, shooting stars are common, morning stars are common. Your inverted hammer, candlesticks with your hammers, these are candlestick plays, these aren't patterns. Same with this, and this right here. But, you can see right here, you have three straight green candlesticks, and each body continues to get bigger. This is the three white soldiers play. So obviously you have the downtrend here, followed by the uptrend. On the bullish tweezers, you have the downtrend here. You get the first red one, followed by the green one. This candlestick here would already indicate, a change in the momentum. And when you have this, when you have it followed by a green one, you're gonna see some big price action here. Same here. You got these two inverted hammers. The uptrend comes here. You hit this one, but then the next one is bullish or bearish, and you get the price to come down. So I feel like I messed people up. Hopefully I just clarified on the tweezers play. And then you can see, look how closely. Oh well, here you have the three white soldiers. Here you have the three black crows. Obviously, these plays can be flipped. As you can see, this is just the exact opposite of this right here. Same candlesticks, smaller, medium, large, small, medium, large. Here you see the green followed by the red. Obviously, we're going from an uptrend to a downtrend, where here we got the three inside up, going from the downtrend to the uptrend with the big red candlestick followed by the smaller green candlestick, where you see a little bit of resistance at this price level, whatever it may be, and then obviously the upward explosion. One of the main plays we'll be looking at are doji candlesticks, just because they're really easy to spot. They're really, it's just when you get a doji, it's pretty obvious to tell something's about to happen. On this chart, they highlighted these three. We see a downtrend followed by a doji candlestick, an uptrend. Like I said, they're momentum changers, so they can go either way. This is the dragonfly doji right here. You can see how the dragonfly doji is a bullish one as compared to the tombstone doji over here, where we see obviously a sell-off. And then we have a long-legged doji here. So you got dragonfly doji, come all the way up here, you get regular long-legged doji, followed by a sell-off, and then we have a doji. Well, it's not really a full doji. I mean, it's a little bit of a low doji, but I mean, it's still a doji here, as well as here, and you could call this a doji kind of. It's kind of in between a doji and a hammer, just because it does have a little bit of a bigger body on it. But you can see the three straight dojis here, or doji relatives we'll call them, followed by a change in direction and making a bearish to bullish move. Again, here's another doji candlestick play that I just found. You have the sell-off followed by the first medium, or not medium, neutral candlestick. You're not always going to get a doji. It's going to have, here you see the downtrend, and, you don't get a doji here. Instead of getting a neutral price action, you get this green candle here. We just happen to get a neutral one first before we get the green one. But dojis don't always happen at, the trough or top, or the top or bottom of the price action or the downtrend, uptrend. But when they do happen, they're pretty reliable candlesticks that, if taken advantage of correctly, you can cash in on, as we can see here. Downtrend followed by a doji, then we got the uptrend. You can see here you have a doji also, followed by, another uptrend. The only reason I'm guessing they didn't circle these is because they don't tell about significant price change. We can see, small continuation, then you come down a little bit, another doji, you can see the price come back up, going from a downtrend to an uptrend. So that's a doji. That's probably what we'll be looking at the most. Just looking at the play itself, will more than likely doji will be the #1 candlestick that we use or pattern to. Bullish patterns and bearish patterns. This is just a random picture I took, but just pretty much showing the patterns in the stock itself. Right here we got the hammer. It's this candlestick right here, followed by the red one with the small upper body and long whisker. Not really familiar with this this pattern right here, the piercing line, but you can see the momentum change you have right here. You have the red candlestick, followed by your first green candlestick. Now on a play like this, what you would do is you wouldn't buy on this candlestick here. You'd buy on this next candlestick because this candlestick has a medium body with medium whiskers on the top and bottom. So it's kind of like a spinning top. It's kind of like a large spinning top. It's just a momentum. We're just getting ready to see, if we're going to go higher or lower. It's a change of momentum, or a potential for a change of momentum, because, it could continue to go down and then there would be no change. But, you don't buy on this candlestick here. You buy on the next candlestick that confirms the breakout of the stock. And also, this is a beautiful dead cat bounce right here, or oversold condition, where we see, huge sell-off followed by a bounce. So that's also another play that we look at. Then you got the inverted hammer here. These are all, I'm giving you these basic understandings of the candlesticks, the patterns and stuff. Hopefully y'all are grasping onto what I'm saying. But also, it also is good to do your own additional research and information. I give you the basics that you need to know, but you need to build on top of that, and you need to, take it to the next level, and, continue learning yourself, continue studying, how this works and stuff. Right here we got a dark cloud cover. You can see the green candlestick followed by a almost identical inverse bearish candlestick, and then as you can see, like I said, you don't buy here, you buy here. Obviously if this was inverted, going the other way, but you can just see, how these two candlesticks come together, and then kind of help determine that, the next move for this stock is going to be down. And then, just looking at the stock, like I said, these candlesticks right here with the really long bodies, it has a very small top wick, so this is a really good bullish candlestick. Got kind of a spinning top here, followed by somewhat of a doji here. Yeah, like I said, everyone needs to study up on their everyone needs to study up on, you know, their candlesticks. This is one of the very basic yet most important things that you're going to need to know, just because of how much these little, you know, boxes with lines can actually help you out and actually, you know, determine when to buy, when to sell, you know, when's the stock starting to look good, when's it starting to not look good. There's hundreds of patterns out there. There's, you know, a bunch of different looking candlesticks. You know, either go on Google Images and, you know, just type in candlestick types, or, you know, if you need to go on YouTube and watch some more videos. Hopefully I've described most of it. I'm probably going to start asking y'all for some feedback on these videos. I try doing my best on them, but sometimes, you know, it's just me putting together a short preview for y'all, because I am going to have to make a lot of these videos, and they also do take a lot of my time. This one's now running on 30 minutes. They obviously take a lot of your time too, but, you know, like I said, I'm giving you, you know, this is still hours of information that, and, you know, research that I've done, and I'm trying to give it to you in, you know, a 30-minute time frame. You know, this is years, this is a year of, you know, studying these things and everything, and I'm trying to give you, to the best that I can, the basic information you need on these things. And I try going a little more in depth, but I feel it's kind of hard right now just because y'all are brand new to this. So I try sticking to the basics, because I feel like when I start going into it and getting really technical with it, y'all might get lost, which again is why I say it might be good for y'all to do some of your own research. I'd say I give you about 90% of what you need to know, but obviously I'm not an expert. I'm just telling you my basic knowledge and my understanding of it all. So, you know, it always is good for you guys to go out and get additional information on it and do your own studying on it. So yeah, so this was on candlesticks. Next, we'll probably look at indicators, or more defined stock patterns. You know, these are, you know, the ones we looked at were 2 to 5 candlesticks long. We're going to look at, you know, chart patterns that are, you know, consisting of candlesticks from 1 to 10 days, you know, time frames, not just candlesticks, days, you know. Again, something we'll just get into more, and you'll start to understand more and more as we go. But this is one of the most important things, candlesticks. As always, feel free to ask me any questions if y'all have any, and if not, just be prepared for the next video, and keep watching, keep learning. The faster y'all learn, the better, and the sooner we can get started, and sooner we can get started profiting. So until the next video.